How's it going? My name's Dan McMenamy. I'm one of the vice presidents here at Purpose Funding. We're located in Irvine, been around for 15 to 20 years, advertising on Christian radio. So, yeah, love being here, and looking forward to talking to you guys today.
What kinds of mortgage options do you have available?
Yeah, so, one of the big advantages of being a broker is that we have so many programs available to our borrowers, whether it's low income or low to even no income. Self-employed borrowers where we can do bank statement programs and 1099 utilization, things like that. Also for, if you're in a great first mortgage interest rate, we have multiple options where we can do a second mortgage. That way we don't have to touch your first mortgage interest rate. We can actually just get you access to cash from your equity, buy a HELOC or a HE loan or something like that where you don't have to, go into a higher rate right now, just where the market is. So also investment properties is another option that we can offer where there's no income. It's called it's a debt service coverage ratio loan, DSCR, where you can just qualify for an investment property just based off what the rental income would be. So they don't need, if you're just on Social Security income, you may not qualify regularly. At least you have that option where you can get an investment property based on what you qualify for just rental income. So, being a broker is great just because we have all those options and we can shop multiple lenders for the borrower, that way they don't have to. Yeah, so, as far as just a time where I've gone above and beyond for a borrower is, one particular individual who had a bankruptcy in the past and, had tried with numerous lenders to try and get something done, paying off some high interest debt that he had, and, being able to get the refinance done would have, freed up a ton of dollars in his pocket, monthly. So, him not being able to get the financing needed just due to the bankruptcy and other financial problems he's had in the past, we were able to still kind of get the loan done for him. And, just hearing how grateful he was after everything, it wasn't the easiest process, but after hearing how grateful he was, after it makes my job worth it, So, being able to, offer all these different programs for different people, and, just because you can't get a loan done, with another company doesn't mean that we can't get it done for you. So, that's definitely one of my, biggest takeaways is one time we went above and beyond. But there's a lot of scenarios where my clients, we might save them $500, $600, $700 a month, and for a lot of families, that's life-changing, and that adds up. So definitely, the main thing that kind of keeps me in this position and makes me, happy about the job that I do, on a day-to-day basis. So yeah, as far as, two tips I would give borrowers in this crazy market today is, number one, I would say, don't buy down points, or, try and preserve the equity you have. So a lot of times, right now we're in a higher interest rate market, we're in a rising interest rate market. It's the best where you don't want to, try and get the best rate and buy down the interest rate to try and get the lowest rate, because right now, rates are high. One thing we know about rates is that they're always going to go up and they're always going to go down. It's just a part of the nature of the beast, and at some point rates will come back down, at which point you can refinance again. So I think at this time it's not a good time to try and buy points, and maybe instead of getting a 6 1/4, you want to pay 10 grand to get a 5.875. It doesn't make sense to kind of do those types of things right now. You want to try and preserve the equity. You don't want to roll in a bunch of costs to your loan. And that way, once the rates do come back down, you can refinance again and you still have that equity. As for another tip I would make for the second point, would be make sure you're comfortable, with the loan. So, a lot of times people will get in process with a loan and, they may not be comfortable and they feel obligated to kind of, move forward with the loan even though they're not comfortable with the terms of it. Make sure you read your closing disclosure, read all the documents very carefully, and make sure you're in communication with your loan officer to make sure that you're comfortable with the terms of the loan. Because there's a lot of times where some people will just kind of feel pressure, and maybe they're not comfortable with that $3,500 a month monthly payment. So if that's the case, make sure you have your expenses in line, and especially in a time like this where the economy's tough and inflation's through the roof. You don't want to overexpense yourself. So make sure you analyze your expenses and make sure that you're comfortable with the mortgage terms that you're looking to close on. Thanks again. Yeah, this is Dan McMenamy, signing off from Purpose Funding in Orange County. Hope you guys took away some good tips, and if you ever need anything mortgage related, don't hesitate to give us a call.